When I first learned about liquidity, it was confusing and everyone was throwing around terms like stop hunts and auto blocks and liquidity. So I broke it down the way I wish someone could have explained it to me. And if you're busy, watch this video later, but watch it till the end. And let's get started. So the topic we will be covering is what is liquidity and inducement, different kinds of liquidity, and what are liquidity sweeps, and also what are the types of liquidity sweeps, what is inducement. As we can see, there are three types of structure over here. First is single high low liquidity, second is trendline liquidity, third is range liquidity. Okay, so now we will mark liquidity on the line chart. So as we can see, there is order block underneath the structure. As we can see, there is liquidity over higher high and there is liquidity over higher low. Same, there is liquidity over these two highs and again liquidity over these two lows. Again there is liquidity over highs, liquidity below lows. So how to spot liquidity on chart? Basically, why liquidity forms? So this blue zone is order block. Now this is the single high low liquidity where we can see there is only one low which is liquidity. In trend line there is basically a structure over here, trend line liquidity, and third is range liquidity. So basically in trend line and range, so my definition for liquidity is once the order block is mitigated and there is imbalance below the structure and there is also order block, there will always be a liquidity. So in trendline liquidity, as we can see, this order block is mitigated, and in range order block, this order block is mitigated. So what is this? There is equal lows over here and equal highs over here. So in trendline, there is liquidity below the structure, and in range liquidity, there is liquidity on top and bottom. So now we will see what is single high low liquidity. Okay, basically there is liquidity above the structure over here. There is liquidity below the structure. So how do we understand there is liquidity below the structure? Many people get confused over here because there is imbalance over here. As we can see, because there is imbalance over here. The higher low and the higher high has imbalance in between the structure. So there is liquidity below the structure. So if there is order block underneath the structure, we will enter on that order block. Okay. On trendline liquidity, there is imbalance over here and liquidity over here. And these order blocks are mitigated. So what is this doing? It is making liquidity below the structure. So when price want to go up, it will create liquidity below the structure and then price will come and sweep all the liquidity from the lows and will go to the upside. So basically imbalance plays an important role over here. Now we will see what is liquidity sweep. So basically in single high low liquidity, price comes here, fills the imbalance over here. Many times what happens, price tests the zone on higher time frame and then comes to the lower time frame. Okay, so what do I mean by this? So basically this higher high and this higher low is tested on higher time frame. We can say 4 hour, and on 50 minutes there is imbalance over here above the order block. Now there is liquidity underneath the structure and there is liquidity underneath the structure. Price comes, hits our order block and goes to the upside. People confuse between liquidity sweep and break of structure. They think this is break of structure and they try to sell over here. So that is the difference. Again, in trendline liquidity, when order block is mitigated, it automatically becomes liquidity, and this is liquidity. When price comes to the order block and goes to the upside, so what is this doing? This is inducing this low. So basically it's similar. So it's liquidity sweep. And in trendline liquidity, when the order block is mitigated with another order block, there is liquidity below the structure. We need to make sure we are entering below the structure because there is liquidity and there is imbalance over here. And so what is price doing? It is inducing these lows and going to the upside. Same on range order block. In range order block, price shoot up, cleared all liquidity, swept all the liquidity, and then came to the downside because there was liquidity sitting underneath the structure. So price fulfilled the order block over here and then goes to the upside. So what is this doing? This is inducing these lows. So basically that is inducement. Now we will see this on real charts. I have already marked the structure over here. Price broke the structure over here. Again, there was break of structure over here. So what is this? This is imbalance. Okay. What is this? This is imbalance. And now we can see this is single high liquidity. So price came here, fulfilled the imbalance, touched our order block, and then fell down. Okay, same scenario. Price broke the structure over here. There was imbalance over here. Price basically fulfills the imbalance and completes the price action and then goes to the downside. So what is this? This is trend line liquidity. Okay, so when price wants to go or up, it will always sweep the liquidity and then goes to the downside. There was liquidity over here. Price made this liquidity shoot up, swept all the liquidity from these highs and also created liquidity underneath the structure. So price can also sweep the liquidity from the downside. Price came over here. Again, what price is doing over here? Price broke the structure. If you haven't seen my order block video, please watch that video. You will understand why I'm marking this order block, because it broke the structure. So basically what is this doing? It is creating liquidity. Because this order block broke the structure, there is liquidity above the structure. So price tapped our order block and then fall down. So what is this doing? It is sweeping liquidity. It is inducing these highs and then going to the downside. Okay, again break of structure. So basically, so price fulfilled the imbalance and then goes to downside. So what is price doing here? It is fulfilling the imbalance and then going to the downside. Again, what is this doing? It is fulfilling the imbalance and then going to the downside. As well as there is liquidity because the price mitigated this lower time frame order block. So price is making sure there is no liquidity left over here. So why did I mark this liquidity? Because when order block is mitigated, it becomes liquidity. When price wants to go up, it will make sure that there is no liquidity underneath the structure. Okay, so what price did? It swept the liquidity from highs, also swept the liquidity from lows, and then mitigated over here. So what is this? Again, trendline liquidity. So what is this doing? It is fulfilling the imbalance and doing proper price action. So same scenario, once we saw the change of character over here, you will start to see automatically price sweep the liquidity, gave us structure. So there was multiple break of structure over here. So basically price, now we will mark the candle which sweep the liquidity. Okay, so basically this candle sweep the liquidity from the lows. And now what is this? This is all liquidity. So why I am marking this liquidity? Because so this is trendline liquidity. Okay, same. Now as you can see, price slightly broke the structure. We will mark the structure which give multiple break of structures. So whenever we are entering, we need to see there is always some kind of liquidity. So this is the order block. This is trendline liquidity. Why trendline liquidity? Because it was mitigated. Okay, this was mitigated. So this is trendline liquidity. This is our perfect point of interest. We can enter on lower time frame. I have already made another video on order blocks where I have shown what is premium discount pricing, how to enter, what is change of character and break of structure, everything. So you can watch that video later. So basically, when we are entering in the trade, we need to make sure there is some kind of liquidity. It can be single high-low liquidity or trendline liquidity or range liquidity. You will see another examples. So why did I mark this liquidity? Because as we can see, these order blocks are all mitigated. This is mitigated from upside. Everything is mitigated, like whole region is mitigated. Again, this is mitigated. So what is this doing? It is creating liquidity on both sides. So what did price did? Price reacted from this order block, swept all the trendline liquidity. Price, there was liquidity above the structure. So price first came to the downside, swept all the liquidity from the downside and then shoot up. So this is how simple it is. And if we refine this zone, so this is our point of interest and we can enter change of character. Again, change of character. So there was clear structure break and this order block broke the structure. Okay, so price came here, gave us this entry. It was very fast move. Still, we know why did it happen. Why did I skip this structure? Because as we can see, this all structure was mitigated and there was imbalance over here. Okay, this structure was already mitigated and there was imbalance over here and there was perfect order block which took out the liquidity. So this is our trend line liquidity. Again, the structure was mitigated over here. So everything is mitigated on both sides. As we can see, there is liquidity on both sides. So what did price do? Price swept the liquidity from upside, this trend line liquidity, and there was liquidity to the downside. So this will be our target. It is very simple to mark the liquidity once you understand how to perfectly mark the liquidity and what is the behavior of the price. Why price is behaving like going to the upside and going to the downside? Because it is creating liquidity from upside, downside. When price wants to go up, it will always induce the lows. And when price wants to go down, it will always induce the highs. There was imbalance and there was order block over here. And the structure over here is already mitigated. As we can see, this structure is mitigated. Everything is mitigated over here. Everything is mitigated. And you can also trade the reaction from the order blocks. So what is this again? Trend line liquidity. Why trend line liquidity? Because the structure was mitigated. And now there is liquidity sweep because price swept the low and gave us change of character in other direction and price will hit our order block. So as I said, when the order block is mitigated and there is imbalance underneath the structure and there is also order block, it will be a high probability order block. So if we understand the logic behind this order block, the price was already, so it gave us liquidity under the structure. So what kind of liquidity is this? It is trend line liquidity. So price came here, fulfilled our order block and then goes to the upside. Okay, so that's how simple it is. And you can also trade this structure. So how this structure, basically if we see, so basically as we can see, there is trend line liquidity over here. Price came into our zone, hit our order block, and then goes to the downside. Okay, so we can also take the short from here. We can also take buys from here. We can trade every zone where there is liquidity, but we need to make sure there is some kind of liquidity over here. So basically we can take this trade. We can also sell from here. We can also sell from here. We can buy here because there is liquidity and we have valid reasons like change of character, liquidity sweep. And now once price has fulfilled our zone, so price has entered our order block and swept all the lows. So what will now, price will sweep the liquidity from the upside. Everything is mitigated. The order blocks are mitigated from highs. Now the upper structure is already mitigated. Price will sweep the liquidity from the highs. So basically price is attracted to the liquidity. Now as we can see, price gave us break of structure over here. Again break of structure. So there were multiple break of structures. So price came into this order block, fulfilled this order block, like we can enter on 50%, but we can't go on lower time frame because the data point is not available. Price hit our 50% and then goes to the upside. So it's very simple, and your target will be, now basically all the structure over here is mitigated. So this is very advanced concept. Okay, once you understood like how to trade liquidity, you will be on another level. So as we can see, now this structure is all mitigated and this structure is already mitigated. So what will be price doing? It will sweep the liquidity from high. It will follow the higher time frame direction, which was on the downside. So we can also enter from this zone to the downside. Okay, we can also take trade from here, and we can also take shorts from 1 minute time frame by looking at change of characters, and again same stuff on 1 minute. So once this order block is mitigated, we know that price will be going to the downside to sweep the liquidity from below. So now what we'll be looking for, as we can see, there is order block and imbalance over here, and again liquidity. Okay, again we can take short from this order block to the downside like this. In this video I have explained the behavior of the price. Okay, why price behave like this. And if you want to learn more in depth about smart money, why smart money works, like why order block are forming, why there is liquidity, what are the different kinds of liquidity, and I will also give you my personal entry models, and I will also share my entry models to you once you join our course. The price of the course is $300, and we will also give you access to our Discord server. So if you like this video, please hit like and subscribe to our channel. I will be posting regular video on this channel. So that's it for today. We will meet in next video.